All right, so let's talk about the duplex deal that I was in that fell through, meaning that I didn't get it. So I'm going to tell you the story, and I'm going to leave you with 3 lessons that you can take with you as you move forward with your home buying journey, whether it's your first, second, or third home. In that case, it would have been my second. So, backstory. At the end of 2022, I was adamant about finding a place, my first investment property, and getting under contract for it. I did not want anything super old. I did not want anything that required a lot of work. And so I ended up connecting with one of my friends. He's not a friend. He's an Instagram friend, also into real estate. I was telling him more about what I wanted to do and that I wanted to find a duplex. And so he connected me with his agent, and we went from there. I'm gonna save that for the lessons learned. He told me about this duplex because he knew a lot of builders in the area. He was a builder himself. He meaning the agent, and he connected me with one of the builders that was building a home, maybe about 20 minutes from where I live, building a duplex. So I was like, bet, it's not ready. That'll allow me time to save some money. It's brand new. I'm gonna have a warranty. Check. It's in a neighborhood that I've always wanted to live in, because my plan was to move from my place, rent out my place, and move to one half of the duplex so that I can use an FHA loan. And with an FHA loan, if you buy anything from 1 to 4 units, as long as it's your primary residence, you can put down 3.5% as a down payment. Usually when you buy an investment property, you have to put down 15 to 20%, sometimes even more, depending on the lender and the scenario. But I knew I didn't have that, okay? The home would have been over $300,000. So that would have been close to $100K, excuse me, that I would need for the home, for the down payment alone, not even talking about closing costs. So I was like, 3.5% sounds good, and to even make the deal even sweeter, the builder was going to offer me closing cost assistance. He was basically going to cover all of my closing costs. So I would only have to bring the down payment. So I'm like, bet, this is perfect. I got pre-approved. We put the offer in. There was no, competition because the home wasn't even ready yet. And he had a connection. The builder and the agent had a connection. So it worked out perfectly. So I was under contract before the end of the year. And I went to Mexico and celebrated, girl, for New Year's Eve. So great. We move forward. We move. I shop around for lenders as we get closer to my closing date, which actually just passed. My estimated closing date, which didn't happen. So as we got closer, I started doing my due diligence. I'm researching the area. I'm driving over there, talking with the builder about different things, not shopping for furniture, but online browsing for furniture. I'm getting my insurance quotes to see what the insurance will be like on the home. And then I'm still shopping around for rates. And lenders. So again, though I was pre-approved, I knew that if I had something that I didn't like, or if I wanted to see what else was out there, I wanted to go look around. So that was very helpful, and that's actually one of my tips, but I'll dive into it a little deeper later. So I ended up getting pre-approved through a credit union. There's lots of credit unions, but I just started calling and reaching out to people, and the best rate that I was able to get was 5%, which, as we know right now, is pretty good because things have gone up way to 7, 8. So when I saw that 5, I was like, bet. But the reason that I wanted to go with the company that had pre-approved me, which was a major bank, was because they were offering $5,000 in closing cost assistance. And that helped. So I'm like, okay, with the money from the builder, which I could use at my discretion, so that could even cover some of my down payment, and this $5,000 that this bank was going to give me, I basically was only going to have to come to closing with like $6,000, $7,000. And I was like, ooh, this is a win, because I do everything leading with money, okay? Finances. This is a finance channel. So I was like, okay, things are working out. Things are always working out for me. That's one of my affirmations on my wall. So I'm like, yes, things are aligning. Let's go. So as we got closer to the closing date, I've locked in with my lender. I went with the one because they were able to match the rate, that 5%. that the credit union gave me, they were able to match that. This larger bank was able to match that and still give me the $5,000. So they were already going through the underwriting process. Like, they were asking for my documents. Like, if you bought a home or if you've attempted to buy a home, you know, they want to know everything. They want to know what nail color you got on right now, girl. They want to know where you work, how much money you make. They want your statements. They want your W-2s. They want tax return. They want everything, you know, because this is a traditional home buying process. I understood that. This wasn't new to me. I've done this before. So what I learned though was that FHA wants to know a lot more than what conventional lenders want to know. So that was very annoying because they kept asking for the same thing over and over. So ultimately, we get closer to the closing date, and then we realize that they now have access to the market improvement taxes, property taxes, and not the land value taxes. So I think I've discussed this on another video. My home currently is also new construction, so I understood, you know, the difference between land taxes and, you know, market improvement taxes. And basically that means if a home, let's say a builder bought a home and they were paying the taxes on the land for it as they built on it, that's usually a very small fraction of what you will pay once they've added these improvements to the home. So if it's just land, it's not worth as much as an actual home on that land. So that can be thousands of dollars of difference. It usually is. So when he was running, he meaning my lender, when he was running all of my stuff through underwriting and everything, he assumed that they were going off, my mortgage payment would be based off those improvements to the land, like that the taxes that we're looking at included the actual market improvement of the land. But no, it was based on the actual land and not the market improvement, i.e. the home. So when they reassessed my mortgage payment, it went up $800. It went up $800. I said, who has that? I barely have it now, you know, but I know that I'm able to rent out the other side, so things still work out. This place will be rented. Like, I was gonna go from 1 to 3 units, but when they reassessed my mortgage payment and it went up $800, that basically disqualified me from their financing. My DTI, which is my debt to income ratio, was too high. So they were like, unfortunately, we can't provide you with financing because your debt from your current home and this new debt kicks you out of the range that they preferred. So I was like, that's fine, because I don't have an extra $800 to be giving y'all anyway. And if you know anything about taxes, they only continue to go up. They do not ever go down. Like, just like it's likely that your home is going to increase in value, your taxes are likely going to be increasing in value. And I knew that because I'm already a homeowner. So when he said all that, I was like, oh no, this ain't gonna work. So I communicated this to the builder, my agent, all of them. And they were like, okay, is there anything we can do? Like, should we talk to other lenders? And this was the agent really encouraging it. The builder was just asking questions to understand why. No issue with that. But the agent, I felt like, let me just jump into the point. So ultimately, I didn't get the house, you know, so I was able to get my earnest money back, which is what you have to pay. And if you don't know what an earnest money deposit is, I will link it somewhere on the screen as well as in the description box. Yeah, get the tea on that, even if you need to pause this video and go check it out. I got my earnest money back, which was really important. And now I have a new strategy that I'm going to tell you about later, because I don't believe in speaking things to everyone, you know, before they fully manifest. So it's just a lot of prayers that I'm still going through right now. So lessons learned. But that was the whole home buying process. It looked so perfect and pretty, but it just didn't work out for me. But that's okay, because I learned 3 things. Let's talk about them. Number 1 is to find an agent you like. So I think I speak about my agent a lot on this channel. And that's because I love her. Like, she helped me buy this home. She was helping me lease this home. Like, that's my dog, you know, because she's thorough. She communicates. She's knowledgeable, you know, and she just works well. We work well together. And when you're a first-time home buyer, even if you're a second-time home buyer, you're going to have questions, and you want to have an expert who's advocating on your behalf and not just looking at you as a check, you know? And that's how I felt with the agent that I was working with for this duplex. Not that he was a bad guy. He wasn't a bad guy. He was actually a very nice guy, but I felt like he dropped the ball on a lot of stuff. And for me, I'm very thorough. I like communication. I want to know that I can come to you when I have issues. And I just felt that he had too much going on to even do basic things like help me run my numbers, you know? And even when we first connected, like I called him and I didn't hear back from him for a very long time. I had to tell my friend on Instagram, because he had reached out to me and he was like, hey, like, how are things with you and agent? And I was like, oh, I reached out to him. I never heard anything. So I'm going to start reaching out to other ones. He was like, really? Like, he's really great with communication. Let me follow up with him and I'll make sure he gets to you. And so maybe it took his push for him to come back and be apologetic, but he apologized and had a deal. So, you know, it all worked out. But moving forward, I'm just going to trust my gut and say, you know what? Because I signed this buyer, you know, representation agreement, I couldn't take the deal and go somewhere else. It was tied to him. But still, I feel like I would have rather worked with my agent that I know, like, and trust, than with this one who I felt like dropped the ball a lot of times. The only highlight for him, to working with him, is that he brought me this deal. And I feel like now that I know the builder, if I ever decide to do another one, like, I can just work directly with him and choose my own agent. You can do that, you know, as long as you don't break any rules and there's no representation agreement or anything like that signed. Number 2 is to shop around for the best rate. So I discussed that already. What I mean by that is to shop around for the best interest rate. So usually you have a small buffer of days that you can get pre-approved. I want to say 14 days. I'll fact check that and correct it on the screen if I need to. But people feel like you have to go with the bank that pre-approves you, and you do not. I would encourage you to use that as a baseline to see what else is out there. Now that you know this interest rate, you know, these discount points are all of this, take that to another bank and say, hey, I'm looking to get pre-approved. Like, what are my options? And even let them know what you have, because they may be willing to match it and offer some closing cost assistance. Like, there may be room for you to create your own package. And I didn't know that the first time around. I knew to shop around for rates, but I didn't know that they could actually match the rates. So that was a lesson learned. And I was like, bet, I'm definitely going to be continue to do that moving forward, because you want to do what's best for you. Like, people need to earn your business. So that's what I mean by shopping around. Like, get pre-approved and then see what else everyone else is offering, and then build your own package. If this bank is offering closing cost assistance and this bank already approved you for 5% interest rate, they can make a package out of that. You have to ask. It may not be guaranteed, but it's better to ask than assume that it can't happen. Number 3 is to always get the property taxes for the improved land and not just based on the land. So I discussed that earlier. Like, if you are buying new construction, the land value is going to be low if there's nothing built on it yet. But once they build something on it, you know, you have to pay taxes the way that everybody else on the block has to pay taxes, because now it's an actual home. So continue to make sure that the numbers that your lenders are running and the underwriters are running is based on the actual improvements of the land, and not just the land. And this is unique to new construction, but also if you happen to rehab a home, let's say you buy something and you fix it up a little bit or you fix it up a lot, your taxes may or may not go up. Now, that's going to be a case-by-case scenario, but I've known that to happen to other people that have rehabbed their homes, because now it's worth more, so you have to pay more. It's kind of a lose-lose situation, but it's also a win-win, because that means your home is worth more. So it's just monopoly at this point. And then number 4 is to learn how to run your own numbers. So learning how to run your numbers means running an analysis to make sure that you can make money on it if it is a investment for you. So a lot of the resources that I used were online. My number 1 resource was BiggerPockets, biggerpockets.com. Baby, I don't even know why I'm not a member, because they have everything on there. Like, it's a real estate investor's dream. So whether you want to buy a first home or second home, investment property, flip a property, like, BiggerPockets has everything. Like, I be on there binging all day. And they have a YouTube channel. You know I'm a YouTube girly. I don't know what's Sorry, y'all. Bigger Pockets is a game changer. They had a calculator on there that allowed me to run my numbers, meaning I got to get a rental property analysis. So it told me what my cash on cash return would be. It told me what it could rent for. It told me basically whether it was a good deal or not. And I had to have my own criteria to determine what a good deal was, which was determining like what I wanted my cash on cash return to be. And I think the minimum that I set it at was 10%, and it exceeded that. And then also my cash flow. So like after all of my bills are paid and, you know, property manager, all those other expenditures are covered, what is left in net? And I wanted to make a minimum of $300. And so everything was meeting that. Things were looking good. But I would have had to spend too much money to make that happen. So learn how to run your numbers, even if it's your first home, because I've been renting out my home to traveling nurses and I still have a minimum amount that I want to earn. I don't need to run it through the calculators and all of that. I just set my own criteria. So it's important that you stick to that and that you buy strategically. And I have tons of videos that talk about buying your first home or buying a home period strategically on this channel. I also will link that somewhere on the screen. And in the description, it's a whole playlist of tips for buying homes and home buying. So thank you so much for watching. If you want to learn more about home buying and want something a little more strategic and specific for you, you can also purchase Ready to Own, which is my 100-page workbook for first-time home buyers. But a lot of this can be applied to second, third, fourth home buyers as well, because things change all the time. And if you didn't feel like you were prepared when you bought your first home, or you want to be more prepared as you buy your first home, this is going to be a great resource for you. It's built based off of my experience. As you can tell, I've been through these home buying processes a lot. So as things continue to, you know, improve in my life and I accomplish these goals, I make it easier for you all to do the same. So this is linked in the description. It's a physical book. It's meant to be taken with you as you go out and shop around for homes, as you connect with lenders, as you connect with agents. This is going to help you to be prepared financially. It's going to help you with prompts and conversations to have, questions to ask. And it's going to make sure that you buy smart and buy strategically and make a smart financial decision for you. So thank you so much for watching, and I will see you on the next video.